I know companies, big multi-billion-dollar companies like Northwestern Mutual, for example, they bought several $1 billion worth of mini storages and turned around and sold them and made several billion. I mean, it's just, no matter whether you're a mom and pop or you're an institutional investor, it's really a good play.
The majority of people trade time for money in the hopes of building wealth. I'm here to tell you that the traditional methods don't cut it anymore. Welcome to the Passive Income Power Podcast. My name is Doug Earthman. My partner Mickey Bernstein and I are going to dive deep into the power that passive income can have on your quality of life. We're going to discuss alternative assets, strategies, and insights through interviews with the very people who have found freedom through their power. I hope you enjoyed this episode of the Passive Income Power Podcast. All right, thanks for tuning in to the Passive Income Power Podcast. My name is Doug Earthman.
And I'm Mickey Bernstein.
And we've got Jay McLeod here from Focus Bank for this week's episode. Jay and I go way back to the college days. We both attended Ole Miss. He was, I believe, a year above me, but we ran around with a lot of the same groups. I was a KA, Jay was a Pike, and we shared a lot of friends. So Jay and I reconnected about 5 years ago in Jonesboro, Arkansas. Randomly, we're sitting next to each other at I believe it was an economic development meeting, and I was like, man, this guy looks really familiar. I know him from somewhere. And when we reintroduced ourselves, I was like, okay, wow, like been a while. And we've ended up staying in touch ever since then and chatting and trying to share business each other's way. And I was always really intrigued at what Jay always had going on. He's married, has a child, works full-time, and was always doing something on the side, whether it was he had rental houses, he's done ground-up residential developments, and also ground-up self-storage developments, which we'll dive into today. He's also a runner, which Mickey and I can relate very well with. I know he's done some half marathons and at least one full marathon. And he also flies planes in his spare time, which is also really neat. I'll let Jay introduce himself and let me know if there's anything I missed.
Yeah, there's not much of that spare time anymore, but you pretty much nailed it. Went to Ole Miss for college. I'm a fourth generation Ole Miss Rebel, so and my parents didn't push me there, but that's where I wanted to go. And went to college and got my business degree. Had no idea what I wanted to do in college or after, so I went to law school, tried to figure that out. And after law school, I opened up a solo practice here in Jonesboro. During law school, I actually clerked for a couple of attorneys here, and after that, coming out of law school in 2010, after the recession, there were no jobs. There was 1 million lawyers and no jobs, so I had no chance to get a job at a firm. So I opened up my own practice, and that's kind of where my professional career started, was practicing law by myself in Jonesboro. And I grew up close to here, so Jonesboro was kind of a natural landing spot for me. I grew up in a really small town in southeast Missouri. A good place to grow up, but not a lot of economic activity these days. So, and back then, so I moved here because we had come to Jonesboro growing up. We came here, go to the mall, do things like that. So it just seemed like a natural place for me to land.
And your wife's from? Is she from Jonesboro? Oh, okay. Well, for some reason I thought Tennessee. You had some other tie to Jonesboro.
No, she's a big city girl, and I convinced her to move here, and she's still with me, so worked out. A good
That's
gamble.
Good sign. Here's my question. Which marathon did you run?
Oh, I picked one of the worst ones. I ran the Nashville Marathon.
Okay.
Which,
Nashville Rock and Roll Marathon.
Everyone knows, Nashville. Everyone knows Nashville is hilly. What everybody doesn't realize is that about probably 2/3 of the way through the race, they put this giant hill in the race, and then they make you run it twice. So it turned into the Nashville Walk by the end, but I made it. So
Yeah. Well, I ran 12 of them. My best time was 3:45. And I'm going to let Doug brag for a second.
Gosh.
What was your best time,
really
Doug?
Good marathon times.
He's being
I think
modest.
I ran a 3:20 maybe, but I was aiming for a 3 hour or sub 3 and bonked at mile 20, and it turned into a 3 hour and 20 minute marathon. But I also, my first marathon was the country music marathon, and that's a good one to break yourself in because they don't get much harder than that.
no, it's definitely not a course you set a PR
Not
on,
at
for sure.
all. Well, that's awesome.
Well, Jay, let me ask you this. Tell us about your professional path from college till now.
So, talked about practicing law. After I practiced I didn't work for him, but I practiced with two other attorneys, and one of the attorneys in my office was really interested in real estate. So, what we did was we decided to partner up and start developing. And we started with, I think, a $5,000 flat lot and built a duplex on it. And after that, we just kind of kept the momentum going. We built a little bit, we bought a little bit. We eventually got to a place where actually we started building, and then we got interested in mini storages. And I don't really remember how we got to that juncture, but we just saw the potential in them. And my partner Jason had the expertise in actual construction. I had a background in finance and could crunch some numbers, had good relationships with local bankers through my law practice. So we ended up going down that road. And did that we built 2 mini storage facilities from the ground up. And then through my law practice and dealing with the banks, I got a phone call one day, and he was the CFO at that time. Now he's our CEO. Called me and said, "Hey, do you want a job? We're looking for a lawyer to take over as our director of regulatory compliance." So I said, "Sure, why not? I'll give it a shot." And here I am still. And that'll be 5.5 years ago.
Okay. Now, did you manage the rental properties yourself, and did you and your partner manage the self-storages yourself?
Yes, we did. I can't remember how many residential units we had, probably 10 or 15 doors or so. So we managed those on our own, and the same with the mini storages. We weren't always, the good thing about mini storages these days is a lot of times you don't have to be there. Even when we started back in 2015, there were all these systems in place where you could manage and own and run a facility basically from your cell phone. All the software is in app form or desktop form. People can check in, pay for their units, get their gate codes, and you never even have to talk to them, or if they don't want to talk to you. So we were able to do that. As you could probably guess, as our real estate ventures increased, our law practice kind of decreased, which was great, because I had kind of lost the love for practice, and I think he felt the same way. So that's part of that natural transition. The law practice kind of just faded to the background, and we were able to spend a lot more time actively managing the properties.
Do you still own any of those?
Okay, cool.
No, when I came to work for the bank, it basically, there came to be a time when a lot of the workload for managing the facilities and rental properties and things we had was put on my partner, and we just decided to sell all that stuff because he was having to spend way too much time. I was not able to be involved. I actually moved away from Jonesboro for about 6 months to work in our headquarters, kind of learn how to be a banker, because I'd never worked in banking, and I'd never worked in regulatory compliance, even though I'm an attorney. So we just decided to sell everything, kind of go our separate ways. And I wish I could have held on to that stuff, but it was kind of a natural evolution of our careers. I was going one way, he was going another, so it was just the right thing to do at the time.
So, Focus Bank full-time now. Tell us a little bit about the bank, where it's located, who you serve, and services you provide.
Well, Focus Bank was founded in 1931, and we're a full-service community bank. We're about $800 million in assets, and we have 10 locations, 10 branch locations in Northeast Arkansas and Southeast Missouri, and we pretty much do everything except student loans, and we don't get into credit cards. But anything else, we can help you. Loans, deposits. We don't have trust services. We don't sell insurance. So we're really just deposits and loans. That's kind of that's our bread and butter. Gotcha. That's what we do. Yep.
Well, we're primarily real estate investors, and that's who our customers are. Could you share with us how you decided to start owning rental properties and how you made the transition to self-storage? Did you have a mentor? Did you read a book? Did you watch YouTube videos? Or did it just make sense to you?
It really just, it started with my partner, Jason Marshall. He is still a real estate investor and entrepreneur here in town. He was an attorney at the time, and we just started having conversations about it. We were both really interested in real estate, and like I said, started with a duplex on a flat lot that we bought for $5,000, I think. I don't even know where I came up with my half the money at that time. I was not too far out of law school, but and it really just kind of took off from there. But with his, like I said, with his knowledge of building, we were able to acquire some properties and to build. And at that time, you could build, obviously the cost of materials were a lot less than they are now, so you could build pretty cost effectively. I mean, I remember doing real estate deals where we would have construction loans and finance the purchase of the lot and have money left over. So we were really able to capitalize on his expertise, not having to hire a contractor. We subbed everything out. We did a lot of the work ourselves. I remember on that first duplex, we painted some walls and hung some doors. I mean, it was kind of that kind of stuff. We got started at doing it as cost effectively as possible. And then we sat down one day and said, what about mini storages? And we had located a piece of property. And I honestly can't remember, it may come to me during this, how we financed the purchase of that real estate, but we picked a town here north of here called Brooklyn. It's between Jonesboro and Paragould, and it basically only had one self-storage facility, and it's one of the fastest growing bedroom type communities in the state. So we said this looks like a good spot, so we threw it up.
That's do you think think self-storage is played out right now? Do you think there's still a market share in a town, let's just say Jonesboro? Is there still, or is it just sort of washed out?
No, not at all. I mean, I tell people it's one of the universal truth. It's death, taxes, and Americans have too much stuff. And people need places to put their stuff. So if you find a population center that's growing, it's always going to be good for mini storages. And even if you find a market that's tapped out, you can acquire existing facilities that serve the same purpose. I don't think there is a downside to mini storage investing. I mean, it's one of those, I won't say foolproof, but it's pretty tried and true. Whether you're looking for income production or especially, asset growth. I mean, you look over the last probably 5 to 10 years. I mean, it's one of the largest appreciating asset classes. I mean, I know companies, big multi-billion-dollar companies like Northwestern Mutual, for example. They bought several $1 billion worth of mini storages and turned around and sold them and made several billion. I mean, it's no matter whether you're a mom and pop or you're a institutional investor, it's really a good play. And I don't think it's played out at all. I mean, in Jonesboro, for instance, they're building mini storages right now, and every one that gets built within a year, it's full. So I don't think it's played out at all.
Wow.
Yeah.
Very cool. I guess it all. So back to how you got started. So were you just underwriting these projects, these investments yourself? Like, how did you know where to go with that? Seeing that you just sort of picked it up and said, "Hey, let's do this. Let's either build residential or build self-storage." Like, how did you know how to underwrite those deals?
Basically, we just found through internet research and things like that, kind of pro forma sheets, cost to build kind of things, and just using a lot of my partners' know-how on the construction side. We just went in and filled those out, and we would get quotes on different things. Especially, he knew a lot about residential building, but as far as mini storages, we would go and talk to engineers, talk to different companies about cost to build, and really just come up with a game plan to put it down on paper to sell to a bank. And like I said before, the cost to build was so much less than almost all the deals that we did. We could get basically 100% financing on the lot, because we could show that even with the cost of the lot and the cost to build, it would appraise out. It would make sense to the bank on paper. It put them in a good loan-to-value position, put us in a good equity position. So it made sense all the way around. We really didn't have to put money into these projects. I think it's a different environment now.
Yeah, that's unbelievable. When you told me that you were doing these projects with very little to no money down, I was just blown away. Like, that's
another strategy we used on the second facility was we bought almost 50 acres, and we kept 4 or 5 for the mini storage facility, and we flipped the rest of it. So what we ended up doing was basically coming out of that with that land paid for, which was 4 or 5 acres, and we just flipped the rest. We closed the same day. We closed on the purchase of the 50 and sold the other 40-something the same day.
Wow.
And just went ahead, and then so we had a several $100,000 piece of land that was zoned properly, industrial zoning. We owned it scot-free. So that was a huge... So when we went to the bank, we said, "Hey, we own this outright." And they said, "Oh, that's all. I mean, that's basically a several $100,000 head start on the project." So it was a no-brainer at that point for them to do the loan.
So what I hear you saying on the real estate is, these weren't your words, but you have to do it smart, and you got to know what you're doing. Did you have, and you mentioned your partner, but did you have any other mentors along the way that gave you guidance?
I think mainly it was just my partner and some other local kind of contractors in the space that I looked up to. You know, my dad is a great businessman, but that's the one thing he even said, he never got into real estate. So I didn't know the first thing about real estate until I was over 25 years old. I had no experience with it growing up. I mean, I knew you bought a house and you lived in it, and I saw these buildings around town, but I had no idea how they got there or who built them or anything about it. So it was really, I had a lot to catch up in a short amount of time, but I could see the numbers on paper, and that's what I was going back to selling the bank on it. I mean, once you put these numbers on paper, if it makes sense and you say it out loud and it makes sense, it made sense to me, and I could see how here's what our cash flow would be. Here's if we sold it, next week, here's what it would make us. If we sell it in 2 years, here's what it would make us, and things like that. So the numbers I could get. Now, the actual building of the things, that's where, other people came into play because they had the vision of and the know-how to execute the building plan. I was more along the lines of the financial plan.
Did your partner have any commercial building experience, or was he primarily a residential guy?
He was primarily residential, but we actually, for our first set of mini storages, we had a company. Basically, the ones we built, or I kind of say they're like Tinker Toys. It's basically just sheet metal and screws and fasteners, and it comes together. So you buy a package of steel beams, metal, and doors and things like that, and they just go fasten it all together. Huh. So the actual contracting there really was just sticking to a timetable and coordinating different subcontractors, concrete, dealing with those, the building subcontractors, plumbers, electricians, things like that. But I don't believe he had any commercial experience, and so we were both kind of learning on the fly, and that helped us really with the second development because we knew a lot more about it.
That's awesome.
So did you hire a general manager and let them hire the employees and operate it?
Oh no, we were the employees. Okay. Yeah, we were it. We managed 2 facilities, and we kind of split time sitting at the desk. And if we had, like I said before, if we had to be gone, now mini storages can really become. You can make them very automated. So it's nice to have people there, but it's not always a necessity. But we were the on the front lines, checking in people, cleaning out units, doing all that stuff because we really transitioned our life into being full-time real estate investors. So that's kind of all we did.
And so a lot of sweat equity also.
Yep. Oh yeah. So yep, that was us.
I know one time when we were having lunch and discussing self-storage, I guess a couple of years ago when I started poking and prodding you about hey, I want to hear more and more and more about this, you had made the comment that you wish you had never sold those self-storage units. And part of that, and I'll let you say it in your own words, was part of that was because you wish you could have sold them 2 years ago.
Yeah.
But
yeah, it's they're never a bad investment to have. I mean, it's kind of like having a cow. I mean, you can milk the cow every day to get the milk over time, or you can slaughter the cow and eat. I mean, and that's kind of the way we just had to do that the second because my time, especially now, is so limited that even I would. The only other option, I guess, would have been hire a professional management firm to manage all that for us, and it just made sense at the time, the way our lives were going, that we could just kind of sell everything and put the money in our pocket and move on. But I definitely wish I still had them. I mean, I would have no problems owning mini storages again. It's just like I said, it's one of the best investments I think out there.
And
yeah, I just wish Doug and I would have had the opportunity to buy them from you when you sold them.
Yeah,
seriously.
Had I known, y'all would have been my first call.
And what do you have going on right now? I believe you had told me that you're doing some development currently.
Yeah. So because I have limited time, I'm really picky about what I do as far as I guess side hustles, as you call them. And I only really have one right now. I have a friend of mine. Since I moved to Jonesboro, we became really good friends. And he is a home builder and a roofer. And he was approached by a gentleman about buying a piece of property and to develop a subdivision. So that gentleman sold us the property, and we are about 2/3 of the way through developing that 3-phase subdivision. And it's just single-family residential, 1,800 to 2,400 square foot homes, 70-foot lots. Nothing fancy, just building single-family homes. We don't actually build any of them. We just sell the lots. And we got really fortunate because a local engineering and construction firm here in town has literally done everything for us. They've done the design work, the engineering. They go and get the approvals from the city. Basically, we just make decisions and kind of long-term strategize the project. It's been a great deal for us, and I was extremely fortunate to get an opportunity to partner with him on that.
How many houses? Or how many lots? Sorry.
Once it's built out, we're just finishing up phase 3, and that will be 135 lots.
Total or just in phase 3?
Total.
Okay.
Total.
Gotcha.
Yeah, yeah.
And so y'all had the land, you subdivided it, and you had to hire the civil firm to do the civil site plan. And once they had that done, were y'all in charge of, did y'all have to do all the grading and site work, or was that done from whoever bought the lots? How does that work?
Well, it's a unique situation because the civil engineer that actually designed it for us, he does subdivisions himself, but he doesn't. The subdivision we're doing is in Brooklyn. Again, it's north of Jonesboro. He does a lot of development in Jonesboro. So we approached him about saying, hey, can we just pay you to develop it? Because that's what you do already. He does probably more subdivision development in this town than anybody else by far. And he agreed to do that for us. So it's literally been a turnkey thing for us. We haven't had to turn the first shovel.
Wow.
We have meetings with him regularly to see, on get progress, and we go out to subdivision to look at it, but we really haven't had to do anything but make decisions. I mean, it's been a great thing. We probably spent a little bit more money than doing some of the things ourselves, but it also, with our time constraints, it's really the only option we had.
I feel like I know who you're talking about.
You probably do. I don't mind to name names. Everybody knows who he is, so it's just one of those things that where we really lucked out with finding him, and he has all the tools in place. He has the grading equipment. He has 2 crews that run all the time, so and it's very efficient, cost-effective work. So it's been great for us.
That's awesome.
Yeah.
And did you have some tips for investors who want to get into self-storage?
Yeah, absolutely. I'll try to do this in order but I may have my order wrong. But so people writing it down out there, just take them all down and you can make sense of it. But I mean, obviously the first part is finding the land. Nowadays, when we started, we just literally took out a map and said, where are there no mini storages? And we put our finger down on the map, said, there's a town, there's nothing around it, let's do a mini storage there. And that's one way to look at it. In a saturated market, you really have to just look at, okay, if all the facilities are full, let's just go around the population centers in that town, the neighborhoods, the subdivisions. We have a mini storage facility here. I don't, but there's one located here, and it probably has 1,000 apartment doors within walking distance of it. So they could not be better located, and they just keep adding on to their units. And if someone built a mini storage facility across the street from them, it would stay full too, because there's just so much demand there. But so there's really 2 ways to look at it. But we were just keep it simple. There's no mini storages here. There's lots of people here. That's where we went. I guess that's tip number 1. When you're looking at facilities, you want to study your, populations or demographics. What are you looking to offer? Does the population need higher-end units? Does it need climate control? Does it need dry storage? Do the clients expect a fully enclosed, fenced, security cameras type of facility, or do you need something a little bit more low-key where you just have kind of storages unguarded on the side of the road? Some of that may be dictated by your budget, but some of it may be dictated by just see a need, fill a need. That was a big one for us too, because we saw that there was lacking of those kind of higher, what we call higher end, but for mini storages that were secure, fenced, cameras, all the technological improvements we could throw at it pretty much, and it worked out for us.
Are you getting that information? Is it speculative, or are you looking at some sort of market data, market research report for any of that info?
We do look at that stuff. I mean, anywhere in the country, not even private, aside from private research, the Chamber of Commerce in any town in America will give you for free all the information you need. They have demographic, they have median household incomes, population decline or increase. There's a million different factors you can look at to see, okay, the median household income where we want to build these mini storages is the highest in town. So what are these people probably looking for? Or is this area of town, or is this town in general growing? Is it declining? That kind of stuff. All the research, especially now in 2023, you should never have to pay for anything. I mean, I don't think you could start and go from start to finish on a facility and never spend a dime on research. I would say another thing that which we started with because we were broke was crunch your numbers early. I mean, if it doesn't make sense to a bank and on paper it doesn't make sense to you, it's never going to work because you can push the rents in a market, but only so far. So if your competition is at a certain price point, you can't expect to cash flow a facility just because you raise your prices 50% over your competitor. That just doesn't work that way. It will make it work on paper, but it will not work in reality. So you have to get realistic with your price points on your units. And if those price points work to service your loan and your fee, your maintenance and things like that, then it'll work. I guess another thing to consider there would be what your end goal is for the facility. Is this something you're going to build and keep until you retire, or is it something you're trying to turn over in a few years after you can get some long-term capital gains? That kind of stuff. You can cut those margins a lot closer if you know you're going to keep it forever and you don't need cash flow. But it's hard to sell something that doesn't make any money to certain investors. So that's really, I guess that's a personal choice, but it just depends on what your goal is.
Yeah, strategy. That is what we try to let our investors know too. It's like there's a ton of different strategies out there, and you got to fit the strategy to your goals. So yeah, we definitely resonate with that.
Yeah, I think that's crucial. Developing a management plan. I mean, we knew out of the gate that we were going to manage it ourselves, but if that's something a cost you're going to have to incur, that's going to go into the numbers too. Most people, even though that you can automate these facilities to a large degree, a lot of people expect someone to be there because, especially in the more rural communities, like Jonesboro, I mean, people expect to be able to drive up a facility and talk to someone if they have an issue. So something like that can really help. If you have a manager there, if you have an owner, someone there that can answer their questions in person, or when they call the phone, there actually someone answers and not just an automated system. In different markets, that could be different. When I have a storage unit now, I rented here in town. I never talk to anybody, but because I don't care to, it doesn't. I guess in that age group, it doesn't bother me just to do it that way. But some people are different, so that's it.
Mickey, would you like to talk to someone, or would you rather it be automated? Coming from a different age group here.
Well, I can go either way, really, as long as the automation solves my problems.
Right.
I know my personal experiences utilizing self-storage, things do come up.
Yeah.
I guess if there's a way to get in touch with somebody, that would certainly work too. I know my son runs a business out of a self-storage and has got a couple of things, and he asked me to go over there and put things inside, and I don't even know where they are. So it's like if the manager wasn't there to give me the key and show me where it is, I'd have a hard time.
Yep. Or if you roll up your storage unit door and there's like a rat colony in there, probably want to call the ownership and say, hey, can you guys come take care of this? Or
a roof leak.
Or a roof leak that just rained down on your, grandma's piano that's priceless or something like that. So, obviously, with any development, funding, identifying your source of funding is critical. I was fortunate, I had good relationships with banks here in town. They were willing to work with me, actually really generous. Like I said, willing to do 100% financing on a lot of things. That's pretty rare. I will say that I would not, for anybody looking to get in any kind of development, you're probably not going to get treatment like that, especially in this environment and interest rates and property values. They're going to want you to have some skin in the game. So really, it's just finding your source of funding, especially down payment, whether that's you and some buddies gather up your IRA, take a loan on your 401k, or you do, private equity where you start up a fund and you get a lot of people you don't even know to develop a facility. Maybe you can develop it with cash. So, and that goes back to crunch the numbers. But finding and I guess along with that goes with picking the right bank. So working at a bank, I know what we do, what we don't do. Some banks out there won't touch subdivision development. Some probably wouldn't touch mini storages. I don't know why, but they might not. Have discussions with several lenders about, hey, do you guys do this? Is this something you're going to be interested in doing? Because you don't want to get all this stuff prepared and go to a bank and you're banking on them. That's your only option. They say no. So have discussions with multiple lenders to figure out if they're interested at all. And most of them will be on mini storages. Now, some investments, things, subdivision development, commercial developments, those are more specialized, a lot more risk in those. So that takes, sometimes banks are a lot more likely to say no than yes, but luckily there's no shortage of banks out there, so you'll be able to find somebody.
Yeah. I know you mentioned private equity, and of course that's what 2D Investments does, and we're currently looking for developers who are building or buying storage facilities and are looking for private equity, usually in conjunction with some bank loans, to create some sweet returns for investors to do in a very passive way.
Yeah, and that's something that was definitely above my pay grade. We were fortunate we could do it with just our sweat equity, and we ended up putting some money into a few projects. But so I made it was simple. It was like we start with zero investment, and whatever the numbers were is what they were. There was no calculations of investor return, how much do we finance versus how much cash do we put in. It was kind of like whatever we can get away with, basically.
Yeah, that's such a unique opportunity. I absolutely love that story of both of those self-storage units and developments. I feel like those are you got in at a really neat time where there was the ability to pull something like that off, and you'll hold on to those unicorn stories for the rest of your life and be able to talk about. So that's fascinating.
Yeah. I guess in a parallel universe, I'm still a full-time real estate investor developing Lord knows what at this point, but life kind of took me in a different direction. But it's definitely it was a fun period of my life, and still is. Like I do have a side project here and there, but being a full-time investor was fun because it was just whatever I could think up. Whatever, you're only limited by your imagination, and then if you can put it on paper and sell it, it's and you can make it happen.
Yeah. And speaking of your side gigs, got any ideas or projects on the horizon?
Really for me now, because like I said, with my schedule of family and work, I'm really just, any investing I do will be either I'll give someone some money, things like 401k, or investing in a fund like you gentlemen have several of, or if I do it myself, it's going to be fun stuff. Like my next thing is probably going to be a beach house, because I'll get to enjoy it. I can hopefully put enough into it to pay a management company so they can take care of it for me, since it'll be hundreds of miles away. But if I do any personal investing, it'll be fun stuff that we can enjoy, a house at the beach in the mountains or something like that, that will get me equity and build my wealth, but also will provide me some entertainment, and I can have control of it, more so than other forms of investing.
You're speaking Mickey's language now.
Yeah.
Yeah, I'd be happy to help you anytime, Jay, when you start working on that. I've had 3 condos on the beach, and they were all big success. And
well, good.
And all started out as just a fun place to go vacation, and using rentals to subsidize the cost of it.
Right. Yeah, that's my goal.
And then we had a good time, so we bought more.
Yeah. Good. Yep. I think that's it.
But anytime I can help, be glad to. In fact, Doug, that might be another podcast sometime.
There we go.
Yeah, we'll
beach rentals.
Yeah, in a couple of years, maybe I'll have some more beach rentals, and we can talk about my successes or failures. I don't know. It depends on where it goes.
Good deal. Well, do you want to tell the audience how they can get in touch with you if they have any banking needs?
Yeah. Absolutely. I am here 9 to 5, 8 to 5 or so every day, focusbank.com, or you can hit me. My email is my first initial J, my last name, McLeod, at focusbank.com. You can email me with any question you want, banking related or investing related. I'll give you any advice I have. That's something I really have always just tried to help people. Like anybody that comes to me, I don't expect anything in return. I'll help you any way I can. I just think probably because part of me wishes I was still in it. So I'm like, when people start talking about mini storages or developments or things like that, I get fired up, and it makes me. I really enjoy talking about it. So it's even if you're a complete stranger, just please email me or reach out on our website, and I'll be glad to talk to you.
Very kind of you. Well, Jay, we sure appreciate you sharing your knowledge with us tonight. You've been great, and it's been a very informative episode of the Passive Income Power Podcast. And folks out there, we want you to help us help you find your passive superpower.
All right. Thanks.
Thanks, guys.
Thank you for watching the Passive Income Power Podcast. We hope you gained wealth-building insights. I will ask you to do 3 things to help us serve you best. Go to our website at 2dinvestments.com, click on Investors Club, and fill out the basic information to have timely access to new offerings. 2, follow us on Facebook, Instagram, and LinkedIn. And 3, feel free to set up a call with Doug or Mickey through our website. We would love to help you find your personal superpower.